All right, ladies and gentlemen, let's go ahead and get airborne. Welcome to day two of options basics, the basics investing, stocks, all sorts of just kind of ground school. Welcome to your ground school. Before we even get airborne, let me ask you this question right now. How many of you, if you're able, did yoga this morning? Or not even if you did yoga, got out of bed and did something other than cup of coffee, sit, laptop, CNBC. Show of hands. How many of you did something? Okay. Or, even if you're, not physically capable, I get all that stuff. How many of you, as soon as you open your eyes, or maybe a little bit after opening your eyes, you closed your eyes again and you sat there and you were grateful that you woke up, grateful that you had air in your lungs. Hopefully you had a roof over your head. If you're on a webinar this morning, I'm going to make an assumption you had a roof over your head, maybe some loved ones where you are. So the reason I am asking these things, you're probably sitting here, if you're new to Top Gun Options, going, what the hell does this have to do with trading? Everything. Absolutely everything. If you didn't do those things, you're most likely a very shitty trader. What? That's offensive. I really don't care. It's the truth. After doing this for 3 decades, that is a fact. Okay, now we have some senior folks. I'm not going to say older because I'm getting older too. There are some senior folks here. I know we have some mobility challenged veterans, and folks, if you can close your eyes, you can engage in mindfulness or gratitude. Why am I starting a brief rambling about this? Because for the first time in like months, literally, I stopped counting because like the first time in months, I had a losing trade yesterday. I had a bad sniper shot, and I need to do a better job of debriefing my winners, but I spend a lot of time debriefing losing trades as well. That was a stupid sniper shot yesterday. Why? Because we're in the middle of all these debt ceiling negotiations. Literally from 1 second to the next, it's, oh, we hear they have progress. Market rallies. We're all going to die. Market implodes. So I took a bad sniper shot yesterday morning. And somebody posted that in the Max Afterburner group, like, Wiz, thank God you taught us how to dogfight a trade that's going against us. So a bunch of y'all, the smart folks, turned a losing trade into an extremely profitable trade. So you're welcome for that skill set. Let me, who was it? Because that was pretty funny. I'm like, yep, losing trade that you can turn into what? A very, very nice winning trade. Frank, that's who it was. Took a hit on some, rolled, blah, blah. Tough day, but glad Wiz taught us how to dogfight these snipers. That's exactly right. Now, I think it was, I stopped counting, like 30, 33 profitable snipers and then a bad one yesterday. That's obscene. That's lights out trading. I'm like Bobrovsky for the Panthers in the playoffs here. By the way, game 4 tonight. Hopefully it's a sweep and we win the Prince of Wales trophy tonight. So going to the game, going to really fired up. But anyway, here's why I bring this up, and here's why we're talking about this. Let me ask you, the current Top Gun Options members already know this answer, so you don't have to waste your time typing it. But if you're new to Top Gun Options, I know we have a lot of new folks in here, new to trading. How did I feel yesterday? I don't know you, Wiz. Let's make an assumption. How did I feel yesterday with a losing trade? You don't even have to type it. You don't have to write the word pissed, upset, angry, because you'd be wrong. How was I? Fine. I was absolutely fine. Conversely, let me ask you how I've been for the past 2 months, 3 months, however long it's been on my sniper winning streak. How was I? Crushing it. I just showed you the performance of this portfolio. This is one of our portfolios. The S&P 500 snipers in this account $78,000. How do you think I felt with making all of that, those profitable trades? How do you think I felt? Fine. Wait, hold on. You weren't celebrating? And nope. So exactly. So I'm hitting home here because why? Centered. If you are freaking out, like if you had took a sniper yesterday and were freaking out, you're doing it wrong. The first thing that tells me, if you're like, holy shit, is you're trading too large. What did I tell you yesterday in the beginning of our basics? Risk management is absolutely critical to being a successful trader. So if you're looking at a trade like, holy shit, if that goes against me, I'm screwed, you're doing it wrong. I've been in this business long enough, over 3 decades, that I know that streaks come to an end, good and bad streaks. And it's, as somebody just said, it's always fine. Shameless plug for our podcast. Episode 33 is my beautiful bride, Susie. After doing the medicine, you know what she realized? She's like, it's fine. Everything's always fine. Even if it's not, it is. Even if it's great, it's fine. It's always fine. That's her wording, not mine. I love the S&P 500 imploding here. So just a quick centering moment, right? Because I'm going to start this brief with a couple things that are going to be weird. Then we're going to get into trading and basics of options, calls, and puts, and how we can apply them to what's going on right now as the S&P 500 implodes. So there's some stuff you can do outside of these briefs that I strongly recommend you do. Yeah, look at the VIX yesterday. We talked about getting long volatility, and the VIX exploded yesterday. If you listened to me yesterday, as opposed to the sniper, and got long the VIX, you probably negated the bad sniper shot. So VIX is popping up. So I want you, there you go, Christina, up 43% on my VIX trade this morning. Beautiful. There's a couple things I want you to do outside of your full throttle training that you're going to get here at Top Gun Options. One of them is going to be this. You need to watch this show. All right, I sign up for a free brief, series of free briefs, and this guy's telling me to watch a Showtime series. Yeah, you are. Billions. Why? Because it's a true story. Just everything that happened at Billions I saw during my time on Wall Street. Because you have to get a flavor for the battlefield. Billions is actually loosely based on Steve Cohen, who runs Point72 or SAC. He wrote a check for over $2 billion to stay out of prison. Most of his captains and lieutenants underneath him went to prison for insider trading. But ladies and gentlemen, you have to get a flavor for the investing and trading battlefield. Was reading an article last night on Carl Icahn, just got destroyed. He's got a $15 billion hole in his portfolio because of a 38-year-old kid. Okay. And Axis, yeah, I saw that. Axis coming back. Not a Mike Prince guy, so he is coming back. But anyway, if you're sitting there like, okay, I'm here to learn about investing, and he's talking about a TV show. Yeah, I am. And yeah, you're going to watch it. If you don't, that's on you. It makes no sense. First of all, it's entertaining. And second of all, you're going to go, I can't believe people on Wall Street act like this. I got a buddy in an alphabet agency. You know what happened the other day? Breaking news, an explosion at the Pentagon. What happened to the S&P 500? It was like $500 billion or some obscene number got wiped out in about 4 minutes. It took, 10, 15 minutes before the Pentagon released something that said, no, that's a lie. And then the market recovered. Do you think some kid in the basement did that for fun? Or do you think maybe somebody else did that to make money? So you're going to watch Billions. Binge watch it. This will give you a flavor on who's on the other side of your trade. Folks, this is a market. Either there's another person, firm, thing on the other side of your trade, or a market maker. And you're going to find out about market makers as well. But this is like my two boys wanting to fly jets for the Navy. They watch Top Gun. I point out the inconsistencies, but it gives them a pretty good flavor. Watch Billions. Okay, done. So 90% of investing and trading is emotional. Do you understand that? So if you're new to the, you didn't attend yesterday's brief, as some of you emailed support, before I forget, you're going to get the replay page right now, where everything's going to be posted. So here is the replay page. So yesterday was kind of a setup for investing, beginners, markets, stuff like that. So let me put this in the chat box. So this is where all the replays are posted for the week. Okay. So I'm not joking when I say that 90% of trading is emotional. How do you take the emotion out of your investing and trading? You have SOPs, standard operating procedures, or you have checklists. You have trade plans. Okay, we're going to get deeper into some trades today. And before I even squeeze the trigger on the trade, I'm going to tell you when we're leaving. We talked about this yesterday. We're going to dig into our trade plan a little bit deeper today. Before you do anything, you know when you're leaving. I do Irish exits, man. When I talk to my wife, we have to go to a cocktail party. Before I even get in the car to go there, I know when I'm leaving, right? Before I ever got airborne in my F-18 on a mission, I'm like, what does success look like and when are we out? Ladies and gentlemen, the time for me to decide what I'm going to do if I get shot at by a missile over Iran is not when I get shot at by a missile over Iran. I sit on the aircraft carrier in my air conditioning, sipping on my whiz cup of coffee, and I make the decision at that point. The number one mistake most new investors or traders make is emotional. Give me a vertical head nod that you understand this. Checklists help you. If you look at the top left of every slide at Top Gun Options, what does it say? Discipline, risk management, superior execution. If you are disciplined and you manage your risk, you will beat the smartest hedge fund managers on the planet, I guarantee you. I do it, and I'm not that smart. So, couple other things. After you watch Billions, here's something you should watch. It's called How to Change Your Mind. Okay. So you can watch it in one night. There's 4 episodes, about an hour each. It talks about psychedelic assisted therapy. I got my mushroom shirt, my Timothy Leary shirt on today. We're going to talk more about this tomorrow when we talk about more bullish long-term trades. Okay. The only 2 things I'm bullish on right now is Amazon long-term and the psychedelic sector. In 3 weeks, 2 weeks, 3 weeks, whenever it is, I'm flying to Denver, taking our fighter jet to Denver for the MAPS conference, Multidisciplinary Association for Psychedelic Studies. 10,000 booger eaters, slide rule, pocket protector folks will be there. Veterans will be there. Hippies will be there. I'm bringing this up because after sitting with the medicine, ibogaine, 5-MeO-DMT, which is also toad or bufo, and iboga, I have never been more centered, more calm, or a better trader. I mean, the COVID crash, I was disgusting. Millions of dollars in profit. But, I hadn't done the medicine yet. I couldn't even imagine. Now, real quick, I did not sit with the medicine, become a better trader. Aaron Rodgers did not go do ayahuasca to be a better quarterback, folks. You do these things to better yourself. Being a better husband, father, human being, trader, yay. Extra, those other things are. I needed to be better myself. So we're going to talk more about the psychedelic space. I could not be more bullish on this space. I have a ton of investments in this space. Why? Because I have knowledge. The past 3-4 months, I've been to Costa Rica twice with incredible groups of veterans, first responders, and family members, and to see them going through their integration and how their lives have changed and how they're changing, helping others is obscene. It fills me full of hope and gratitude. So, not telling you to go out and start taking psilocybin or microdosing to become a better trader, but put this in your brain housing group. If you want to be a better everything, consider it. And I could talk about that all day. So along, with this, put this in your brain housing group. Okay. Yeah, there you go. So Erin, badass F-15 Strike Eagle fighter pilot. She said, I sat a dinner with my ex and it didn't faze me. Would have never even been possible before Iboga. So look at that. There you go. Erin, that is some progress right there. Great books. I am still the only books that I have on the shelf right now are a couple investing books, and the rest are psychedelics and history. I love my Lincoln, Grant, and my military history stuff. However, Wiz, there's a lot of books on investing out there. Throw them out. What? At the height of COVID, I kicked myself because I didn't take I'm at the curb I had a recycling bin full of investing books. They're in the trash. Not in the trash. I recycled them. Why? Because they're all bullshit. It's over with. There's no way if my dad was still alive and I dropped him into this market, he'd be like, well, hold on a second. The Federal Reserve has pumped $9 trillion into this economy. And here's when we talk about AI is replacing everything, including traders. That will not happen in my lifetime. I have buddies who have been for decades trying to build AI to trade. It can't right now. Why? Because markets are what? Look at the book on the right. Are markets rational or irrational? Markets, you don't even have to write it, are irrational. I told you yesterday, if you took chunky 40-year-old Wiz and dropped him from the Chicago Board of Trade in 2006, 7, 8 to sitting here today, didn't show me anything in the market, and you gave me I gave myself a good strategic brief. War, inflation, Fed, blah, blah, blah. I'd be like, oh my God, the VIX is at 90 and the S&P 500 is negative 5,000. And then current me would go, that's why you're an idiot. So throw everything out. I don't care if you're Charlie Munger or Warren Buffett. You, they, me, have never seen this market before. I can't believe I'm going to quote Maya Angelou, but that shows you how well-rounded I am. What a beautiful day. I don't think I've seen this one before. You, we, us, them have never seen this. When you have a Federal Reserve chairman who sits in a 60-minute interview and goes, yeah, I just make money out of thin air. We print it sometimes and ship it to Federal Reserve banks. Otherwise, I make digital. I hit enter on my laptop and money appears. What? So, but these would be good books, the only ones that I have kept, ladies and gentlemen. Okay? These make sense. Okay? You got it, Mark. That's exactly right. So the myth of the rational market is Liar's Poker was the first. When I got hired by a volatility arbitrage firm, and I'm a little old retail trader, I'm like, how do I? They're like, read this. Read Liar's Poker. Michael Lewis is great. Read Liar's Poker about the bond traders and Salmon Brothers. Even if you don't even know what a bond is, this is like billions. Both of these books are billions in a book. So if you like going to the beach or skiing, bring these two books, order them right now. Okay. Now, after getting some of this stuff out of the way, these are also required reading. The Power of Now, A New Earth, and The Four Agreements. Ladies and gentlemen, if 90% of trading is emotional, if I were sitting in this brief as a fighter pilot and I'm new to investing, and the dude or the lady told me, 90% of it is this, and here's how you get rid of that. I'd eat these. I'd be on my phone right now ordering these from Amazon. This is how I succeeded. Okay? These things are life-changing. Reading these 3 books will change your life. Okay? So whether it's yoga, mindfulness, reading these books, if you are not centered, if you don't trade like I told you yesterday or invest, SOT, strategic, operational, and tactical, if you stay down here at the tactical level and don't do any of these things, you will be broke shortly if you're not already. I can show you scores of case studies in a Dropbox file that I have of people who are like, dude, wandering around the financial education desert for 20 years, found you. I've made everything back type of case studies because of all of this stuff. I would not be taking the time to brief you on this if it didn't work. Okay. And any Joe Dispenza book, man, I got like 3 of them sitting over there. I still need to read the one green one, whatever it's called. But these folks, Joe Dispenza is fantastic. Okay. And like I said, a yoga practice if you can move at all. That's actually me and our director of medicine operations, Nicole Fox. She was my first yoga instructor, and this has helped me before doing any medicine work, folks. The yoga, the breath work, the meditation, reading those books made me better. Okay, so required thinking, you got to meditate. Me, when I first started my mindfulness practice, I couldn't sit. In the span of 2.5 seconds, I had a million thoughts. I'm like, it's physically impossible. Now, you're not supposed to judge or grade your meditations, but now, man, I put on my playlist from when I did the medicine in Mexico, and I am in within about 30 seconds. I am back. Where am I? Nowhere and everywhere. Without thought, without feeling. And if there are thoughts or feelings, guess what? I can observe them not from this shell. I don't want to dig too deep into it, but I'm talking to the people who are like, dude, I can't close my eyes and sit still for 30 seconds. I get it. I was there. You can. It's worth it. I meditate for 20 minutes when I get up. And then, when I meditate for my afternoon meditation at 3. That's the last hour of trading. Yep. For 20 minutes from 3 to 3:20. I get totally centered because the last hour of trading can be pretty funny. If you're sitting here all day staring at shit, you're doing it wrong. A wise man once said, you must meditate for 20 minutes a day. And if you don't have 20 minutes, an hour. Let that sink in. When I was at the trading firm in Chicago, I'd be in my office or doing whatever, and somebody would come up to me panicked. Whiz. Oh, my God, we're having problems getting quotes from the PhilX to the traders, and we're losing money. You know what my first question, when anybody panicked or opened my door in Chicago, you know what my first question was? Did anybody die? And initially, everybody kind of gave me looks like, dude, what are you talking about? Because I come from a profession where people would open my door, panicked, and people were dead. So in Chicago, they learned pretty quickly to calm down. Did anybody die? No. Then relax and let's look at the problem. Cracks me up when people are like, wow, did you ever see Miracle on the Hudson and Sully when he lost the motors? He was really calm over the radio. What are you supposed to do? Start screaming and flapping your arms? That's actually the exact opposite of what you're supposed to do, right? In our training aircraft in the United States Navy, the T-34 I flew still had an analog clock in the cockpit. Most instructors, when there was an emergency, said what? Punch the clock, meaning hit the thing on the top and let it start counting. And wait for about 5 to 10 seconds. Why? Because when you start immediately doing things, you can do them wrong. You know how many airliners have crashed because, hey, there's a right engine fire light. Okay, shut it down. And the dude shuts down the left engine. And now they have no engines and everybody dies. You calm down. You lose in a trade like I did yesterday, guess what I got to do? Go home. I was at home. Watched hockey last night, watched the Heat lose, enjoyed my family, had a great day. The same type of centeredness that I had when I had a winning streak of 35 sniper shots, uncontested. Okay? So be centered. It can always be worse, right? So, the fact that you're even sitting here on a webinar and breathing and a roof over your head, a loved one, hopefully, you are doing better. Not that you're trying to be better than 90% of the people in the world, but imagine being a kid in the middle of the Sudan right now looking for water. It can always be worse. The more centered you can be, the better trader investor you will be. You ready for this? And I don't use this word that often. I guarantee it. Okay? Everybody give me a vertical head nod that you understand and have received all of this. This is a good replay for folks. Even if you're a current member, trust me. If none of that resonated with you and you're the best trader in the world, that's awesome. But hopefully try some of what I recommend. Okay, this is not my first rodeo. Okay, good. A lot of people are like, yeah, I needed to hear that. Good. It can always be worse. Here we go. So everybody knows what stocks are. What are options? So options, to use the SAT word, are derivatives. They are a derivative of a stock or an ETF. What's an ETF? An exchange traded fund. Or an index. What's an index? The S&P 500, the Dow Jones, the Russell 2000. Those are indices, right? VIX, right? So options are simply a derivative of a stock, ETF, or index, right? That's called the underlying. If we're going to do some options on Amazon or Target or Budweiser and pound them into the dirt, instead of buying or selling the stock, we can rent it. Instead of coming out of pocket a lot of money, a lot of capital to buy or sell a stock, we're going to use an option. An option gives us the right or the obligation to buy or sell the underlying. Okay? Now, before we even get into the underlying or stocks or anything like that, let's talk about a call option. There's two types of options: calls and puts. Calls are usually bullish. Puts are usually bearish, and we'll get to them in a second. The term put comes from you can put the stock, the ETF, the underlying. I'm just going to stick with stock, but ETFs or indices, you have the right to put a stock to somebody else if it goes down. So usually, for everybody who's brand new to options, call options are usually bullish and put options are usually bearish. That's it. Two types of options. So let's dig into a call option. I love this analogy because it's almost happened to me, and we'll talk through this. This is a beautiful home in Aspen. So let me just tell you real quick why I use this. Because when I predicted the COVID market crash to the day and made people millionaires here at Top Gun Options, I've been dying to buy a home in Colorado, specifically Aspen. So when I knew the COVID crash was coming and everything like that, I called out and I told the lady, a realtor, and I said, yeah, that house, $5 million. No, it was 10. 10. Yeah, it was 10. I said, you call me in a month when that's 5. And maybe I'll buy it. And the lady's like, oh my God, really? And she was all blown away and shit like that. Then what happened? She called me a month later and said, oh yeah, hey, it's me. That's 20 million right now. Click, you moron. So I got that wrong, right? Because where did all the rich people start fleeing from? San Francisco, LA, New York. They all fled to the mountains. So I just bring that up as a funny example. Like, I got everything right in the COVID crash except this. She's like, yeah, the billionaires are pricing the millionaires out of Aspen. So you're an idiot. And I'm like, I'm an idiot. But anyway, so let's say you want to buy this home in Aspen. Okay, you fly out to Aspen. It's listed for $10 million. It's the first home you look at and you're like, I think this is it. I love it. 10 million bucks. I love it. Hold on, dude. It's the first house you're looking at. Okay. You're going to be here for a couple weeks. You're here for 3 weeks. So let's keep looking around. Woo, I don't want to lose this. All right. So why don't we tell the owner, tell you what, I'm going to pay you $100,000. Okay. For the next 3 weeks, I want the right. I'm going to buy an option on this home. I want the right in the next 3 weeks to buy this home for 10 million bucks, and you get $100,000. The seller, right? The seller gets $100,000. Buyers have rights. Buying this call option on this home gives me the right to buy this home for 10 million bucks, and I'm paying you the premium is $100,000. Okay? Everybody understand that. All I did was buy a call option. The seller has an obligation. Buyers have rights, sellers have obligation. The seller is obligated in the next 3 weeks to sell me this home for 10 million bucks, and they keep the $100,000. Welcome to call options. If you followed that 3-minute example, you're an options trader. Okay, now let's talk through what can happen. During the 3 weeks, you're driving around Aspen looking at other places. Guess what happens? The governor of Colorado announces that they're building a prison literally in the lot next to you. The value of that home essentially it goes to zero. That $10 million home ain't worth anything. What do? Nothing. You had the right to buy that. All you can go, dude, no thank you. What happens? What do you lose? $100,000. That's it. That's why I say that options are safer than stocks. People are like, oh, options are dangerous. People who say things like that are idiots and they don't know what options are. What's more dangerous? Losing the $100,000 or buying that house for 10 million bucks right out of the gate, and all of a sudden that $10 million house with the prison next door is at zero. Stocks can go to zero. Options technically can't. The premium, you can lose all your premium, but it's that compared to a ton. Everybody understand that. Okay. Now, the person on the other side of that trade, the seller of this call option, they're going to eat it. that sucks. Okay. So, folks, if you understand that, an option is a contract. There are two people in this options trade, a buyer and a seller. The buyer had rights to buy it. The seller was obligated to deliver it. Done. That's it. Now let's talk about the good. During the 3 weeks, and so it's a contract, right? What do everybody on this webinar deals in contracts, folks. What did I describe in this options contract? 3 weeks was what? The date. So there is something called an expiration date. This agreement we have expires in 3 weeks. You also had a price, a strike price, 10 million bucks. And you also had a premium, didn't you? Options contract. Let's talk about the good. During the 3 weeks you're driving around Aspen, Jesus Christ himself, Buddha, Ganesh, and Muhammad announced that they're opening a fraternity house next to this one where eternal peace is centered in the planet. the value of this $10 million home, it becomes a $100 million home. Guess what happens? You have the right to buy this home at what? Say it with me, 10 million bucks. So what happens to the premium of this options contract? Right? You paid the $100,000. This options contract might be worth $50 million or whatever it is. So you have the right to buy this home for 10 million bucks. But you don't have to. I said the right. I'd say 90 to 95% of options contracts, ladies and gentlemen, are not exercised, meaning you don't buy the home. You do what? You sell that options contract that went from, you being out of pocket $100,000. Now it's worth $50 million. Hey, man, I don't want the home in Aspen. I'm going to take the $50 million I made on the option contract and, I don't know, go to Big Sky or something like that. Does that make sense? If you can track that, you are now ipso fatso an options trader. That is a call option. Let me give you a perfect example of this. I got a buddy down in Fort Lauderdale who's a yacht trader. Guess what he does? He does the same thing, but with yachts. The dude has never taken delivery of an option. These feed ships or Ferrettis, these yachts, they take a couple years to build. So during that, he'll buy he'll have an option to buy one of these things for, $7 million. And during that time, it goes up. You know what? By the time they put everything in it, this yacht is worth 13. He gets out of it. Now, here's the knock on wood. The economy is doing good and shit's going on. He has gone through spells when, holy shit, we're in a recession. And now instead of that yacht being worth $3 million, it's worth $6 million. So but you get it, right? Okay, so you can use options. All right, so that, ladies and gentlemen, is a call option. Okay, a put option is kind of the exact opposite of that, right? If you had heard a rumor from, your buddy in the State House, like, hey, they're going to put a prison next to that home in Aspen, you could have done what? You could have bought what is called a put option. Now, it's really interesting to me that in the United States of America, most Americans have three assets. What do they usually have? A home, a car, and a portfolio of some sort. 401k, a Roth IRA, a trading account, something, right? Guess what? 3 out of those 3 things, only 2 of them are required, sometimes by law or your mortgage company, to be what? Insured, right? Against it going down. A home, my home's insured, my cars are insured, and me, my portfolios are insured, and I'll show you how. So put options, ladies and gentlemen, just like a call option has a buyer and a seller in a put option. When you buy a put on something, you believe it's going to go down. You make money on it going down. So if you understand that right now, if you logged in early, I was looking at Target, or Budweiser. We have been destroying Budweiser for the past month. I've paid for a lifetime membership with my Budweiser profits. You could buy, and again, this is why I said yesterday, the most important piece of trading software you'll ever have is this. The 6, 8, 12, however big your head is, if you're Stewie Griffin from Family Guy, gray matter between your ears. All you need is a brokerage platform. First, it cracks me up when I go to these type of presentations. Like, I have this proprietary trading software that you have a brain. Yeah, use it. Budweiser, Target are getting destroyed right now. Target's going to get even worse, right? You could buy puts, and we'll get to a trading screen in a little bit. When I finish up the basics here, you can buy puts on something, and you think it's going to go down. So if you're brand new to investing, I'm going to show you how you can make money as something goes down. We talked about the buy, hope, and pray method yesterday, right? If you're new to investing, it's like I buy a stock, and I hope it goes up, and if it doesn't, I pray. Those days are over with. You can buy a stock and hope, pray it goes up, and if it doesn't, and it starts going down, you can actually buy some puts and make money if your stock goes down. Now, if you're a put buyer, thinking something's going to go down, who's on the other side of that trade? A put seller. Guess who is technically a put seller? The USAA, who insures my cars, or Citizens Insurance, the state here in Florida, since nobody insures homes in Florida. Ladies and gentlemen, those are put sellers. Let's talk about, I'm in South Florida, hurricane insurance, right? That's they sell you hurricane insurance, right? And what do you do in return? You pay them, what's the word? A premium. Okay. If the hurricane don't come, they keep that premium. Okay. If the hurricane come and damage the house, they have to do what? They have to deliver a new home, or in my case, I'm still in court suing our insurance company, a new roof. Okay. So, ladies and gentlemen, that is a put option. You can actually, and if you join TGO, I'll show you how you can sell puts. You can be an insurance company. One of our instructors here, Goose, F-16 guy, American Airlines captain, has a cool tactic where you just keep selling puts underneath a stock, meaning I don't think this thing's going to go down. A hurricane ain't going to hit this stock. Insurance, and we sell it. We sell puts underneath a stock. If you think, hey, man, ain't no storms coming through, that's a put seller. A put buyer says, that thing's going to implode and go down. So when we do our SOT right now, since we covered the options basics, strategic, operational, tactical, you can probably look around the world right now and go, hey, man, there are some bad things going on. Or you can look, you could look at names like a Budweiser or Target. You can read the paper just as well as I can and go, well, that's kind of dumb. Their stock's probably going to take a hit. Yeah. Welcome to being an options trader. Was that hard? I love when people are like, oh, options scary. And no, you're just an idiot and you're ignorant. But ladies and gentlemen, stocks and crypto can go to zero. Okay. All you can lose in an options trade is the premium you paid. Right? Or received, paid or, received. It depends on whether you're buying or selling. Right? So I get it. When I showed up to Navy Flight School in Pensacola, 1991, I felt like I was drinking out of a fire hose. So you should feel like that. But hopefully I explain that in such a way that should be a garden hose. Okay? If you understood this 15-minute calls and puts explanation, you have officially become an options trader. Folks, that's the DNA of options trading. That's the basics of calls and puts. They're simply a contract. Instead of going out and buying the house, we can just trade options on that house in Aspen without ever taking delivery. Okay? All right. So good. Let's kind of dig into it. Quick review. This is how we trade here. You are not going to be the average retail trader anymore. You're done being tactical only, right? We're going to do a quick brief today. What's going on around the globe economically, politically, militarily? We're going to peel that onion one layer deep and take a look at the United States. What's going on with McCarthy, Biden, debt ceiling, the Fed minutes released today at 2 o'clock, inflation, interest rates, and then tactical and talk about trading. Okay. Now, when we get into trading, ladies and gentlemen, the most important thing to have right next to you, whether it's a kneeboard card or a trade journal, go to Staples today, go to Office Depot, and go get a journal in the corner. Why? Because you are going to start writing down what you're doing. I am a writer. I take a pen, paper. I got some stickies, my Amazon trades on here. Why? Because there is something about the human mind and body picking up a pen and writing something down, and it's in your own handwriting. Now, I know people who print out these trade plans and they put them on Excel sheets or Word documents. That's not me. I am not a Word document or Excel type of write down my type up my trade plan. Why do I do that? Because if during a trade it's going against me, I look at my own handwriting a couple weeks later and go, man, I told myself I was going to get out at this point. Or if it's going with me, hey, man, wow, this trade's doing great. I'm making a lot of money. Get out. Well, no, I want to make. No, you don't want to make any more because it says right here you were going to get out here, Wiz. Pigs get slaughtered. Write your trades down. Over here underneath the handouts, you got 3 free handouts, man. They're worth their weight in gold. I'm going to step through this real quick, and then we're going to go apply it. So now today you're also getting a look at what full throttle training is. 8 sessions where we dig into individual tactics, and we usually do full throttle training at night, 7 o'clock Eastern, 7 to 8, 8:30, however long it takes for me to get through training. Why do we do those at night? Because the market's closed. And I don't want people coming to full throttle training like, hey, what are the trades? No, market's closed. We're going to train tonight. Then the next day, we come into one of these, which is called a live trade brief, where we apply what we learned the night before. In the military, we call it demo do. I'm going to demo, you going to do. That's how you learn. So here's our 7-step trade plan. Strategic mindset. That's step number 1. What is your strategic mindset? And I mean 3-6 months out. Okay? Strategic mindset means 3 to 6 months out. There's only 4 of them. And then there's a couple variations, but the 4 strategic mindsets are what? Bullish, I think the market's going to go up in the next 3 to 6 months. Bearish, I think the market is going to go down the next 3 to 6 months. Volatile, man, this thing is up, down, sideways. It's all over the place. It's going to be extremely volatile. Or neutral, man, we're going to chop sideways for a while. You can have variations. Okay? Right now, for example, I am cautiously bearish. What? Dude, that doesn't make sense. It makes perfect sense to me. Let me go show you. Let's go look at the S&P 500 real quick. Now, some of you, and that's you got to fly and fight in your own airplane, can say what right now? Looking at the left side of the chart is what? Volatile, right? You look at the left side of the chart, it could not have been more volatile, right? Look at that heart rate monitor. That is the classic definition of volatile. I'm not talking about the left side of the chart. I told you yesterday, where do we make money? You make money in the white. This is where you make money. Ain't no broker on the planet that lets you trade off the left side of the chart. So when I look out the next 3 to 6 months, I'm cautiously bearish. Why cautiously? I told you at the end of last year, beginning of this year, Top Gun Options members, I called for what? A June pivot. Told you it repeatedly. A June pause or pivot. That the Federal Reserve would take a break. Jerome Powell would take a break, at least pause from cranking up interest rates, from 40-year high inflation that Joe Biden, Janet Yellen, and Jerome Powell said was transitory for a year and a half. So I know, we have a new definition of the word woman. We have the new definition of the word recession. We have a new definition of the word recession. I love Democrats. Something's going wrong, you change the definition. You can't hit the ball over the net, you lower the net. So when, not if, when Jerome Powell, the Fed, pauses or pivots to cutting rates, which won't happen this year, the market will have a rip your face off rally. Whoa, hold on, Wiz. That doesn't make sense. The economy sucks. Did you see Facebook today? Meta cutting off, laying off more people. Amazon, big tech is getting destroyed right now and laying off people. The jobs market is cracked. The housing market is imploding. I'm in South Florida, folks. The housing market is imploding. Interest rates are rising. Inflation's still high. Nuclear war in Ukraine, blah, blah. You're preaching to the choir. But you ready for this? Former retail trader who I'm going to turn into a semi-pro. Write this one down, this wizism. The market ain't the economy, Chief. As a matter of fact, you ready for this, former retail trader? The crappier the economy gets, the better the stock market can be. What? That makes no sense. You, if this doesn't make sense to you, didn't throw out all your trading books or investing books during the COVID crash. It's over with, folks. Don't you know? Since the crash of 2008, Ben Bernanke, our Fed chief, that everybody gets a trophy. there is what we call a Fed put underneath this market. God forbid we have failure in this country. Failure is technically how you succeed, but that's a separate conversation. Everybody gets a trophy. You can't have a down stock market. Jerome Powell and the government will print money until we are Weimar Germany, buying a loaf of bread with a wheelbarrow full of dollars worth nothing. So, ladies and gentlemen, this is why you're not going to be frustrated ever again, and you're going to be a TGO member, because I'm going to teach you these things. The crappier things get, potentially, the better the market can be. Now, I'm going to date myself right now because I'm old, but if you're old like me, you probably watched Sanford and Son growing up. Fred Sanford and Lamont, you big dummy. His son. Once an episode, Fred Sanford would grab his chest and have a heart attack, wouldn't he? Well, he did one day, but for real. I'm coming, Elizabeth. This is the big one. The big one in the stock market will happen when things are so bad and the Federal Reserve is, he's Scotty in the engine room. I'm giving you all I got and I can't give no more. That is when the market breaks and cats and dogs living together, mass hysteria. Until that time, the market and the economy are decoupled. This happened, the last time this happened, I was in the Board of Trade. The markets, after the Fed jumped in, did this. All of the macroeconomic indicators did this, folks. So there was a big gap between the market and the economy. Okay? Does everybody understand what I'm laying down here? This is a big deal for you to understand and follow. I am laying the groundwork and for this. Okay. So that, ladies and gentlemen, you have got to come. Why am I cautiously bearish? The cautiously I throw into my strategic mindset is because cautiously means the cautious is the market could do this. I am bearish. Looking at everything when I do my strategic brief each morning, I could not be more bearish. The VIX should be at like 50 right now, and the S&P 500 should be at 3,000. It's not. So I'm bearish, but the cautiously part is, you ready for this? Here's another wizism. I think we're up to 5. Trade the market you have, not the one you want. Okay? Everybody understand that. That is critical to your investing and trading. I think that's the number one wizism. If I had to rank them, trade the market you have, not the one you want. Here's 1A of that wizism. If the market isn't doing what you think it should be doing, you are wrong, not the market. Give me a vertical head nod. That's another important wizism. If the market ain't doing what you think it should be doing, you are wrong, not the market. The market is always right. And I love when people say the exact opposite, like, no, the X, Y, and Z shouldn't be happening. It is. You're wrong. It's a famous line from the movie Aliens. I loved Aliens, right? I don't think you've been keeping up on current events, man, but we just got our asses kicked. That's what happens when you can't believe your eyes. You are not in the moment, the power of now. You got to be here right now. Step 2, now that we have our strategic mindset, I am cautiously bearish. You can be whatever you want. Now let's come up with the target. Now we're going to target something. I have my strategic mindset. What's the target? Simply, folks, the target is what I call the stock, the ETF, or an index that we're going to trade, right? Stock is Amazon. An ETF is the spider. An index is the S&P 500, the VIX, or the Russell. Now, here's your Uncle Wiz tax tip of the day. I'm not your accountant. I'm not your tax attorney, and I don't play one on TV. But there may be better tax treatment if you trade an index over an ETF. Do you understand that? If you don't, we'll talk about it another day. Do not trade an ETF if there's an index you can trade. And the money you save on that could potentially pay for your lifetime membership. You need to go do some research on your own. And by the way, ETFs settle in shares, which could be bad. I will teach you down the road about this. The indices settle in cash, which is a lot better. I will teach you this in full throttle training. This is just part of the basics. Take a screenshot of this or write this down. You have a little camera icon. You can take a screenshot, but this is important for down the road. So step 2, target. Step 1, I got my strategic mindset. Step 2, what am I targeting? Step 3, folks, if you've been clubbing in the Bahamas for the past 55 minutes mentally, get in the brief, because this is the most important step in the trade plan. Commit criteria. Just like in my F-18 Hornet, I had commit criteria to go point my nose downrange at bad guys to go kill them. What are my commit criteria? Why am I committing my pink body in my F-18 downrange? Because of these reasons, Wiz. Okay, they reached my commit criteria. I'm pointing my airplane downrange and risking my pink body. Same thing in trading. Why are you committing capital to this trade? Why are you in it, getting in it, right? Folks, this has to be written down 3 to 5 sentences, right? I call this the cocktail party pitch or the elevator pitch. If we got on an elevator together on the 30th floor, by the time we hit the lobby, you have got to hit me with 3 to 5 sentences of why you are committing capital to this trade. It has to be so tight that I have to look at you and go, oh my God, why am I not in this trade? Why is this so critical? You know why? Because 2, 3, 4 weeks or whenever down the road, if the trade is going against you, I want you to reread those 3 to 5 sentences. If your commit criteria for getting into a trade have changed, why are you still in it? This will help take the emotion out. I love people are like, oh, you know, I'm in this Apple trade and it's going against me right now, but you know, Apple loves me. It's going to come back. Did you write down? What are your 3 to 5 sentences? Boom, 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 boom. Well, it sounds like 2 of those sentences have changed. Why are you still in the trade? Well, hope, moron. Ladies and gentlemen, if any of those 3 to 5 sentences change, eject. Get out of the airplane, man. Okay? Everybody understand this. This is the most critical step. I love questioning people sometimes. Why are you in that trade? I like Apple. Why? I don't know. It's a good stock. Moron. 3 to 5 sentences of why you're committing capital to this trade. You need to ramble them off, man. And if you can't, you're doing it wrong. Now that we know our strategic mindset, we got our target identified and why we're going to put money into a trade, hard-earned money. Now we just select our tactic. Ain't a strategy. If you go to one of these free briefs with some other idiot that uses the word, this is my favorite option strategy, that person is an idiot. A strategy that we're talking about is saving for college, short-term income generation, risk management, buying a boat, paying for college. Those are strategies. Tactics support a strategy. You hear somebody use the word strategy wrong, they're a fool. Run away from them. So how do we select our tactic? Well, we look up our trade plan. What's my strategic mindset and what are my commit criteria? Folks, I just gave you a basic understanding of options, a call and a put, and I'm going to build you up from there. Tactics that we're going to employ: a bull call spread, a bear put spread, not complex at all. DNA is calls and puts, and then we're going to build them into tactics. Okay, so step 4 is simply the trade. Bull put spread, iron condor, diagonal, whatever. You, for registering, got a $45 OPCL, options pocket checklist. It's got 32 tactics that I think. You know how many I use out of that OPCL? 3, 4, 5. I ain't going to be that dude. You can go find somebody else who's going to be like, I do a reverse calendar put spread with an iron condor twist on top. Okay, with all of that, I could do this tactic that, is political science for political science majors. Don't get it ain't cosmic, folks. You want me to get super cosmic? It's stupid. You don't have to. Any super cosmic options tactic trade, I can show you what the basic trade is. So ignore those people. Step 5. Here's how we put the trade on. We identified the tactic in step 4. This is just how we set up the trade, right? If it's a spread, we're going to look at individual legs, what the price is. So, folks, this is the gut of the trade, okay? And I do this in every live trade brief. We step through the tactical employment, how we're going to put this trade on, right? Step 6 is what I call mid-course guidance. Folks, I never sat in the F-18 and pushed the pickle button and closed my eyes when the bomb left the jet and said, man, I hope that hits some bad guys. Do you think in trading, squeeze the trigger on a real trade and go, man, I hope that's profitable? Clearly, I don't. Hope ain't a strategy. So, folks, this step, we ask, what if? What if it's going against me? What if it's going for me, right? Should I adjust the trade? Mid-course guidance. I'm old enough that I used to drop laser-guided bombs. You'd have to move it a little bit, not run the bomb out of energy by moving it too much. We'd adjust the bomb mid-flight, right? So we call it adjust. Okay? And we figure out what our profit target is. I didn't even make this trade yet, and I know what my profit target is. So mid-course guidance, ask what if. What if down the road it's doing this? What if it's doing that? You already know what to do. And finally, step 7, the General Colin Powell trade, the exit plan. Haven't even placed the trade yet, and I know when I'm leaving. You write it down. I told you yesterday, I'll remind you today. He was ordered to remove Iraq from Kuwait, and before President Bush left the room, he said, hold on, Mr. President, what does victory look like? When am I getting out? General, we haven't even gone in yet. Yeah, exactly. I spent some time in Vietnam, Mr. President. We're not doing that shit. What does victory look like? I know when I'm leaving for minimum loss or profit. Do you understand? Ladies and gentlemen, I've been doing this for 30-some years, and that is the tightest trade plan on the market. Ain't too many traders running around with missions over Iraq and the corner office of a Wall Street firm. This has been tested on both of those battlefields. Print this trade plan out, the ones that are over there in the handouts, and use it. Now, I'm a little slack because I'm kind of sticky and stuff like that, but I have I have stacks of trade journals. I love rereading them sometimes, especially some losses, because I learn from my losses. So that, ladies and gentlemen, is your options basics and your 7-step trade plan. What did I tell you yesterday, man? And I said this in Solo Amazon. Solo Amazon brief was Monday for members only, so a lot of you free folks weren't in there, obviously. I said 4,200 was a top, and we're going to give this back, baby. Look at how violent these, implosion, explosion, implosion, chop, explosion, implosion. Very, very volatile. But these also set up some really beautiful sniper opportunities. Should have done a bearish one yesterday. But let's talk. Let's do a little. Let's go look at our brokerage account here, and using basics of calls and puts. Let's just do some quick examples right now. So let's go look at SPX. This is the S&P 500. Okay, I don't trade SPY. SPY would be the ETF. This is actually the index. So I would trade this. Okay, so only let's just be blindingly clear about this. Even if the government defaults on its debt, which would cause a horror in world markets and our markets, the S&P, if we default on June 1st on our debt, which is a distinct possibility, folks, the S&P 500 will be down here at 4,000 easily, if not these lows, 3,800, 3,850, 3,800, easily. This will happen in the market. So, using the basics of options that I just taught you, what could you do? Wiz, I absolutely think the clown car in Washington is going to crash. All right. So we actually know something, don't we? We actually have a date. June 1st. Next Thursday, technically, according to Janet Yellen, our Treasury Secretary, we're bingo. We are out of fuel. Now I'm already hearing rumors like, well, technically we could go another week and carry the one and the mouse eats the cheese, whatever. But we're going to know days, at least, before June 1st that we ain't got a deal. Okay? So let's talk through two scenarios. No deal, default, and deal. No default. Obviously, default, market implode. In the options basics lecture that I've given you, you could do what? You could buy some puts. We'll take a look at which ones and when in a minute here. Conversely, you could do what? Wiz, it's always a clown car. They always take us up to the edge, and we never go over the edge. I think this is going to happen. We are going to get a deal before June 1st, and the market's going to have a relief rally. It's a distinct possibility. Or there's a third scenario, ladies and gentlemen. Guess what? Both of those things happen. We default or get close to the edge, market implodes, and we have a rally. So let's talk about the bad first. Okay? We have a date. So right now on your screen, ladies and gentlemen, this is an E-Trade account. On the left, for everybody new to options, are the calls. On the right are the puts. Okay? These dates up here are when options contracts expire, right? Just like our house example. 3 weeks, I want to go look around Aspen for a house. So these are what's called expiration dates. And if you can see with the S&P 500, they have daily expirations. June 1st of 2023, June 2nd of 2020, blah, blah, blah. These are daily options. With the S&P 500, you can trade these every day. They expire at the closing bell. So I just gave you June 1st. You could go out to June 1st for an options trade. Okay, so let's go. Let me deselect. Let's reselect June 1st. Okay, let's go take a look at the chart. So as I told you yesterday, there's the 50-day moving average. There's the 100-day moving average. There's the 200. We haven't touched one of these things in a while. At a minimum, if we get towards next week and we don't have a deal, we're going to go through that 50-day moving average. Hell, I think we're probably going to go down to the 100, which is what, about 40, 46. Okay, so we could go buy a put, right? Let's buy a June 1st 40-40 put. Okay. Now, buying one June 1st 40-40 put is going to cost you almost $2,000, $1,960. Okay. If that is a little too rich for your blood, you can go trade the ETF, which would be SPY, the spider. Okay. So let's just go SPY. I would not do this because I like trading SPX, but I'm just saying if it's a little pricey. SPY is an ETF, and the 100 days down here at 403. Okay. So you could go buy, let's delete that, the 403. Let's buy the 403 put, and that's $184. Okay? So buy one or however many that you'd want to do. I'd be buying one of the 40 put or whatever it was with SPX. Okay. Now let's analyze this trade. The most you can lose, ladies and gentlemen, Wiz, you were wrong. They got a deal. The market had a rip your face off rally. The most you can lose, ladies and gentlemen, is what you paid for that put option contract, $184. The market could go to infinity straight up. That's all you lose. What you paid. This is the house example in Aspen. Holy crap, Wiz, I could make 40 grand on this trade. Look at the probability of you making 40 grand. You know how you make the max profit in these put options is if the S&P 500 went to zero. If that happens, you're not going to know you made 40 grand because we're all dead from a nuclear explosion. There ain't no way the S&P in the next week is going to zero. Is it possible? Yes. Is it probable? No. So, and I don't know why this P&L chart over here isn't working, but folks, you know, there's usually a chart in here. I think my E-Trade platform was acting up before where you can kind of move your cursor around and go, hey, what's realistic? Let's go look at SPX real quick, see if it's working for that. So that, ladies and gentlemen, if you're brand new to options trading, could be your first options trade. Hey, man, I'm going to buy just a put for $184 and see what's going on. Now, tomorrow, I'm going to show you how me being cheap, Wiz being cheap, I do something else to make it even cheaper. So maybe wait until tomorrow for your first options trade because I can show you a cheap way to do it. What the hell's going on here? Buy. Let me analyze. It is in increments of whatever, doofus. Morons. Yeah, something's wrong with this. All right, so here you go. This one, ladies and gentlemen, if I bought the 4040 SPX put, now let's go analyze it. The most I can lose, ladies and gentlemen, is $1,900. How do I lose $1,900? The S&P 500. You were wrong, Wiz. We got a deal. Okay, but I told you my commit criteria for buying this put, we're kind of stepping through a trade plan right now, is what? This is the default. Buy a put. Now you can see this. How do you make $400,000 in this trade? The S&P 500 goes to zero. Okay, this is, you're essentially, a massive hurricane hits. Yay. So, yeah, that's why this P&L chart looks like that. This max potential profit is based on you're buying a put, and the only way you make the max profit. But you can obviously slide along this thing. Let me show you this and show something realistic. Let's say, it implodes to 40.50. You can see down here where it says underlying price, current price, and theoretical P&L. You can kind of play with it and go, okay, well, I'd make $6,000 if the S&P broke, at S&P at, whatever 1,000 that was. Yeah. You can see how much, where you'd be making money. Now let's do the exact opposite. So that, ladies and gentlemen, is the commit criteria for everybody's stupid and we default. You can buy this right now, folks, and keep that on. Is you ready for this? A hedge. Wiz, I'm new to options. You did a great brief today. I know that. But I'm long. I got a lot of stocks in my portfolio right now, but I'm a little scared if we default, they're all going to get destroyed. Buy a put. It's the cost of doing business. It's insurance. So if you're long stock right now and you're looking at, breaking news every couple minutes out of Washington, like no deal, and you got your Lucky Strike cigarette out, go buy some puts, man. Buy some puts on the stocks that you have. All right, now let's do the exact opposite. Wiz, they're going to take us up to the edge, and, come on. We ain't going to default. If we do, it's going to be catastrophic. Even the Republicans and Democrats together aren't that stupid. They're going to do something. All right, well, you're probably right. This is most likely going to happen. We're going to have what's called a relief rally. I mean, look at how violent these things are. We probably will get one of these. And if we get one of these, it might go over what? What I said yesterday was short-term resistance. This looks like up here at 4,200 on the S&P 500 is short-term resistance. If we get a crisis averted, we might get a relief rally through 4,200. Okay? So let's go, same thing, but use a call. Remember, put was bearish, call is bullish. Maybe we buy an upside call of 4,200 maybe. Scroll down, 4,200. You buy one June 1st, 4,200 call. What's the most I can lose on this? $825. Wiz, you were wrong. We defaulted on our debt. Cats and dogs living together. And the market imploded. Should have bought puts. Okay. I was wrong. $825. And first of all, folks, don't do anything I tell you to do. I'm not telling you to do anything. I'm telling you what I'm doing. You're getting to eavesdrop on what I'm doing. I will never tell you to do anything. I do not give investment advice. I'll tell you what I'm doing. What you do on your side of the laptop in your bunny slippers is your own business between you and God. That ain't my business. So buy a single 4,200 call. The most you can lose is $830. Max potential profit. Whoa, infinity? Wiz, I can make infinity? I listened to the Max Afterburner podcast, episode 7, and you became infinity. Exactly. No, you can't make infinity. What this P&L is showing you, ladies and gentlemen, is that technically, if you buy this call option, they can't put on the screen a profit limit, right? There's no, it's technically infinity. We don't know what your potential profit is. If the market has a rip your face off rally, what's realistic? I don't know. We go up to 4,250 or something like that. All right, I do that. 4,250, I make $6,000 or $5,000. Yeah, that's realistic. Up here, no. The S&P ain't going up to 4,500. If it did, you made $20,000. Okay, so that's why it says infinite. The computer can't pick. I'm not picking a max potential profit for you up here because technically there is no cap on how high the market can go. There is a cap on how low it can go. The market can just go to zero, but technically it's infinite. So with this, ladies and gentlemen, you can buy a call if you think the market's going to rally. Now, if you noticed, I picked these strikes that are what? Out of the money. I'll teach you this in full throttle, but it's hard to see sometimes. But this has like a little bit of a light gray background. And then these down here so these are kind of light gray and these are kind of light gray. What does that mean? In the money, ITM. Currently, the S&P 500 is at 4,100. So those 4,200 calls down here are what? Out of the money. Right? In the money calls are down here. You could buy a $4,100 call. It would be called in the money. Why? Because it's at 4,111. But folks, if you bought, let me clean up the screen a little bit. If you bought in the money call, look at it. It's $50. It's right. So Wiz, I want to, there's intrinsic and extrinsic value in this. If you bought a June 1st 4,100 call, the market's like, well, duh, it's already in the money a lot. You got to pay $5,000, right? So I'll dig into this more in full throttle training, but there's something called moneyness to options, either in the money or out of the money. The out of the money calls and puts are a lot cheaper. Why? Because they're out of the money. They're lottery tickets, right? The market's got to move up or down to hit them, right? So if you want to, like I said, this is just kind of options basics, but there's in the money and out of the money type of options. Okay? So there's also something called the Greeks, right? And I will teach you this in your full throttle training. There's something called theta. There's something called time decay. I was a Phi Delta Theta in college, but theta has time decay, means time decay. Quickest example I can give you is a car dealership in Fort Lauderdale at the Ferrari dealer. If I'm having a midlife crisis and go and buy a $250,000 Ferrari, I buy it and I pull off the parking lot. What happens the second I pull off the parking lot? Theta, time decay. If I'm driving home and Susie said, yeah, your midlife crisis is over, turn the car around and drop it back off. If I went back to the dealership and said, yeah, midlife crisis is over, my wife told me to drop the car back off, can you buy it back from me? What would they say? Yeah, for 200 grand. Whoa. Hey, dude, I bought it for 250 a couple hours ago. Yeah, we'll buy it back for 200. That's called time decay. When you sell something, you like time decay. That car dealer loves when you peel out in your midlife crisis. So when you buy a call option like this, every day that goes by that the market doesn't have a rip your face off rally, you are, quote, losing money on that option, right? It's called theta. It's called time decay. The person, thing, firm on the other side of this trade that sold you those calls loves it. Every day that goes by, they make money on theta. Okay? Again, in the basics of options training that we're in right now, at night, we'll take an hour to an hour and a half in all of these things and talk about the Greeks. But that's the main Greek when you're buying or selling an option. Okay? So that, ladies and gentlemen, is your debt ceiling debate. I love the fact God is great. I love the fact that God is great, but no, I love the fact that I picked a free week of training to talk about investing and trading basics and options basics, because this is a perfect market where you could do, hey, I'm going to buy some puts and buy some calls. Because, folks, the government, even if it defaults on its a month from now, you ready for this? When you're a member here at Top Gun Options, a month from now, we're not even going to remember the debt ceiling fight. We're talking about Jerome Powell, inflation, earning. When something happens, I told you yesterday with volatility, what happens? It's already over with, like the Brexit vote. So technically, you ready for this? Let's use our brains a little bit. You know what, Wiz? I think the market implodes as we get closer because stupidity is going to happen, and then we're going to have a rip your face off rally. So guess what? Why don't we go out a little bit more? Because even if this type of nightmare happens, somewhere out here, when the June Fed meeting ends, we could have this. So why don't we move our radar range out a little bit and do what? Maybe you buy the 4,200 calls or 4,250s out. I just said, hey, a month from today, you're not even going to remember the debt ceiling fight. I guarantee it. So you could go further out in time and buy some upside calls. But guess what's going to happen? Let's go look at the 4,200 calls out like almost a month. They're going to be what, folks? Say it with me. They ain't going to be cheap. Now one call is like $3,400. It makes sense, though, right? The options market is saying, yeah, well, no kidding. A month out from now, we're going to put this behind us. Okay? Or, go up to the 4,250s. This would not be a bad trade. If you are new to options trading, these are cheaper. Look at this. Buy one June 20, 4,250 call for $1,700, right? So the commit criteria for something like that would be crisis averted, Jerome Powell, Fed meeting is over with, they're pausing, so we got a debt deal behind us, Jerome Powell paused, boom, Wiz said last year and the beginning of this year, a June pause and a market rally. I believe that. So this might be an actionable trade for today, to buy a 4,250 or 4,200 over to you call. But like I said, and we got to get going because I went way too long, but like I said, if you wait a day, I'm going to show you how to get these calls, that call, even cheaper. As a matter of fact, not only one call, I'm going to show you how to buy more calls on the S&P 500 for either the same or less money. That, ladies and gentlemen, is how you end a live trade brief to keep people hanging on for more for tomorrow. Now, notice what I did in the past 2 days. Nothing. didn't sell you a damn thing. I will tomorrow, because tomorrow we're going to close the doors, right? So tomorrow I'm going to teach you about spreads. I'm going to show you how we're going to leg into a trade, because I'm cheap, man. Instead of just being and it's funny because people sometimes are like, do you ever just buy straight calls and puts? I just showed you an example of that. But very rarely, because it's interesting, people with basic options knowledge are like, oh, spreads kind of, what are you talking about? They ain't nothing more complicated. I'm cheap. I don't like theta. I'm going to show you tomorrow, if I'm going to buy a call, I'm going to negate some of that theta. I'm going to I love this stuff, folks. I'm very passionate about it. I'm going to show you some cool stuff tomorrow. I would not be a straight buyer of calls or puts, period. That ain't me. You can be, like right now. Go buy some puts on Budweiser and Target. They're both going to get destroyed, and they're going to keep getting destroyed, especially with earnings. I guarantee you Budweiser's next earnings are going to be an absolute insane embarrassment. You see this? Up here, we've been pounding Budweiser into the dirt. I paid for a $22,000 current lifetime membership, $22,500. We've made more money trading Budweiser than a lifetime membership. You're welcome. But you ready for this? I think it's heading down to 45. Their next earnings aren't until, I think, let's go look. When are their next earnings? August. So there's a lot of bad to potentially go between now and August. So anyway, I potential trade ideas. I'm just in the basics of calls and puts. I'm just looking at potential targets to throw out to you. Look at the VIX, 7% today. The VIX was up 10% yesterday. If you had gotten bullish on the VIX yesterday, like I said, we should probably get bullish. You are printing money today. So it negated that bad sniper shot. Isn't that awesome? Look at this. The VIX, folks, can keep going up here and adjust. So the volatility, folks, as the market implodes, if the S&P 500 keeps kind of imploding on this debt ceiling nightmare, the VIX will keep climbing. That, ladies and gentlemen, is what we call a pairs trade. You can trade two things together. Oil prices go up, airlines go down. That's a pairs trade. Volatility spikes, the market implodes. So you can kind of double up your trading. I love this stuff. I'm going to teach it to you. I love it. As the volatility index climbs, the market's going to implode. Conversely, hey, we have a debt ceiling deal. The VIX will implode, the market will rally. That's free money. Does that sound hard? Does it sound like somebody at a cocktail party like, oh, options are dangerous and, I'd never trade those? It's because you're a fool. Ignorance is most people's problems. That ain't hard, folks. As uncertainty increases around a deal, the VIX will climb and the market will go down. We got a deal. Okay, well, then the VIX should implode and the market would go up. If you understood those two sentences, you are smarter than 98% of the Americans on the face of this planet. Okay. Tina, we haven't done those in a while. I've just been too busy. You watch them all right here, folks. The existing full throttle, you want to watch the 8 sessions, Tina, you just underneath members, you go to full throttle. Okay, let me collapse this. You can watch them all right now, right here. Underneath full throttle, all the previous full throttle briefs are on this page. There's iron condors, there's bullish spreads, double verticals, there's bearish double verticals, bearish spreads, covered calls, cash secured puts. It's all in the full throttle training. So I haven't scheduled. This is why we're doing this during this week, Tina, is because I haven't done one of those in a while, and I'm kind of knocking out the first 2 of the full throttle briefs live right now for the free people so they can come and join us, right? So the training, the education should be free. It's the practical application that you're going to have to pay a membership for if you're not a current member, right? So I'm setting the hook here, right? Show you all this stuff for free. And then if you want to see me apply this live in a live trade brief, you're going to join tomorrow, either solo Amazon or you're going to join our full throttle training. Okay. So that's for all the potential new folks. But for Tina, you can go watch all the full throttle training right there. All the current members, go watch the full throttle training. I just knocked out yesterday and today. I knocked out the first 2 full throttle briefs. Okay. I went way too long. Sorry about that. Hour and a half. But guess what? This is kind of how we do full throttle training. It usually is an hour to an hour and a half when I take my time and dig into the basics. This is blocking and tackling, folks. We're going to get to reverse sweeps and, stuff down the road. But these are the basic building blocks of investing and trading options. Okay. Haven't done one of these in years. For free for folks, so it felt good to do this. I like not talking the basic stuff. Isn't that awesome? Yeah, this is you showed up late. This is the replay page. I got to stand right now because after doing yoga and sitting here for an hour, I need to stretch my legs. So I will render this recording and I will post it on this replay page right here. Okay. Tomorrow, you're welcome, Andreas. Tomorrow, I'm going to teach you spreads. So if you liked what you saw today, like I get this, I'm new to stocks, but if you understood what I said today, folks, you're an options trader. You can be an options trader, and I'm going to make you a pretty damn good options trader. What's the motto of Top Gun? You think you're good? We'll make you better. I guarantee we'll make you better. Nope, I'm not selling anything today. I will sell tomorrow, and hopefully everything's sold itself. It's a couple $100 a month to join, and you can make that back in a couple trades. All right, I got to get going. All right, folks, go Panthers. Game 4 tonight. Hopefully we win the Prince of Wales trophy, and we're heading to the Stanley Cup playoffs, man. First time since 1996. I was a young lieutenant on the Abraham Lincoln and then the Kitty Hawk in 1996. That's the last time the Panthers went to the Stanley Cup. So I don't want to jinx it. Canes could do a 4-game run here, but that, the odds of that happening are slim to none, and Slim just left town. All right, guys, I'll see you tomorrow morning at 10 a.m. for our final free brief. Hey, real quick, I think I gave this out yesterday. Look at that, 530 people registered, man. I need to do more of these basic briefs. Friday, 543. Friday, let me give you the link before I forget. Spider is an F-16, was an F-16 Viper driver with the New Jersey Air Guard. He's a PhD. He's a partner at Spotlight Labs, which it does a ton of defense contracting, saving lives with a lot of their air crew stuff. Friday, he's going to give a brief. The link is in the chat box for potential angels to invest in one of his new companies. I'm going to sit like you are and listen to the brief. That's Friday at 10 a.m. This is outside of what we're doing, but he's a brilliant dude. The guy that's coming to brief with him is a former NHL player as well, Braden Ostapuk. And if you're interested, it's external of Top Gun Options. If you want to be an angel in this company, it's a separate. I'm going to watch it too. Although I got all my money tied up in my psychedelic REIT and a bunch of other stuff. All right, guys, I got to go. Replay posted here shortly. Have a great rest of your day. Happy hunting. Make sure you hedge. Fights on. Namaste. And basi basi. I will see you all tomorrow. Fights on.